So good morning again, everyone. This is again L2E investors, and this is the seventh session, as you know. And if you have not seen the previous sessions, please go through the YouTube link that we will provide somewhere in between, and watch it by first, second, third on this order. Because you have, if you do not know the basic, then you will not be able to understand the lectures. You'll start watching in between. But today's lecture is quite different, and you will be able to understand even you have not gone through the previous lectures, right? So this is a simple trading ideas that how to start trading in the market with simple strategies. So we are going to talk about that, and we are going to talk about very basic things that sometimes the very pro traders, the traders those are having good experience, they even forget to follow. They are investing in the market or they are trading in the market since years, but sometimes even we forget that these kind of strategies or these kind of ideas. And believe me, it happens with me also. Sometimes I also get puzzled in the market, what I'm doing wrong. Then I come to the basics. I start watching everything again. I start following everything again. I again come to the discipline, and I come to know that what mistake I'm making. Right? It happens like even very good batsmen scores duck even a very important match. So it happens with everybody. Uh, we are human beings and we are bound to make mistakes. But if our mistakes will be less and our uh, decisions, those we are taking, most of them will be correct, we are going to make very, very good profit. So coming to the next slide, as you know, this is L2 investors and Dr. Roma Singh is me. Uh, and this is a very important quote. See, what happens is like you are having money, but every time once you think that you have to start making an investment, you feel that you're having the fear that I may lose money, I should keep my money in the fixed deposit, or what should I do, right? And every time you think for getting the correct time to get into the market. What happened when the market fell down in 2020? You thought that the market will go down much more from here itself, right? And you have not invested your money. And now, when the market started rising, you are again having fear. The market may go down again, and you are going to lose money. What if what if you have invested your money somewhere in say year 2002 or 2000 when you started earning? Most of on our age group they started earning somewhere in year 2000 or somewhere. And if you have invested only the Nifty 50 stocks, right? And the Nifty at that point of time, somewhere around 1800, 2000 level, their money could have been become almost 9 times or the 10 times since then, right? If you have simply invested only, have not bothered about any fall, you have not rotated money, even then you have made your money uh, 9 to 10 times, right? So this is how we should not try to we should not try to protect our money by keeping them in saving account or the say fixed deposit or somewhere else. Instead of that, we should invest our money. Without investment, the simple quote is there: investor without investment, objective is like a traveler without a destination. So if you want to reach somewhere, make a goal and start investing now. It is not, I'm not saying that you should invest 100% of your money, but you should start investing some part of your money now, right? The people say that the somewhere that the Nifty is at the level of 17,800, 17,900, and now it is 17,000 only. Right? It was somewhere at the point of time it was 18,400 also, and the last to last week it was at the 16,600 also. So what you have to do, you have to start at somewhere. You will not be able to get bottom of the market at any point of time, right? You're not going to get it, because once the market starts going down, you'll feel that it will go down more. Once it starts moving up, the people start thinking that it will move up more. So it is, you cannot time the market, you have to start from somewhere, right? So for a change, Dr. Roma Singh will speak first today, then I will continue.
Thank you,
Please.
Priyansh. So as Priyansh was telling you about market today, so the thing is that this feeling is coming in our mind that why we should invest, because from the beginning, from our childhood, we are not being taught that way. In our schools and at our homes, we are taught that we should work hard. So traditional way of earning is that we should work 9 to 5, or if we are doing business, that we should work 24 into 7. Only then we will earn. So it is a concept which is being built in our mind, and from traditionally it is there in Indian society, that those who people are working very regularly, working very hard, are being considered very good people, and the persons who are not working that much hard and working only a few hours a day, they are not being considered good. But it is not the correct way. Correct way is that we should value our time first. So time is the most precious thing in life, and if we are spending more time and earning less, then we should think that what is the problem there, because we cannot buy time with money, but yes, we can buy money with time. So how we can do this? We will think it over again, and we have to build our concepts again, that it is not there that working hard only gives us money. Hardworking people make money through manual effort, and nowadays, as you see, that manual effort is not everything. uh, it is a virtual world, and if somebody can make a video and upload it on YouTube, and they are earning very well, so they are earning, a passive earning comes to them. So hard work prevent us from thinking. Why? Because if we are earning in a salary, then we don't have time for ourselves. We don't have time to think about money. So what we do, we keep our money in banks, and we keep on working and working, and we think about it. Okay, we will invest when time will come, or we are saving. At least we are saving. Others are not saving. But money is losing value. Every day it is losing value if it is in bank, or if it is sitting idle because of inflation, which Priyansh earlier discussed also. So we have to build this concept again in our mind, because in our schools we are not being taught two main things. One thing is time management, next thing is money management. So these two things are very important. Besides hard working is important, but if you are working hard, earning money and keeping it idle, then it is not good. You have to find out time from your busy routine to manage your money also. So first you will have to find out time. So time management is important, and money management is also important. uh, Traditional way of earning is that you are spending time and you are earning, but modern way of earning is that you are spending less time and earning more. How you can do that? You can find out time from your busy schedule, only 2 to 4 hours if you find out within a week, and spend it on very viciously, on very thinking about it, and spending it managing prior in advance, then you can earn more. So money has time value. This we all know. If you are having 1 lakh today in your account, and after 1 year also that 1 lakh is 1 lakh, then it is not 1 lakh, it is 80,000 only, because 20% at least you should have earned on that. So smart people invest by setting goals. As the quotation said, that first and foremost important thing is that you should set goals, because market is not stable. Sometimes it is up and sometimes it is down. So it is not always there that you should spend all of your money in market. You should distribute your money in 2 or 3 chunks. Decide your goals, that how much money you need next year, how much you need after 2 years, or how much you need after 10 years. So the money you need after 10 years, you should go for investment with that money. And money which you need 1 year or after 2 years, you can spend in mutual funds on some other instruments, which we will be telling you later on. And for day-to-day trading activity, you should keep some money, because that is also a very good investment options, which we are telling you nowadays. So you can increase your money, and then later on you can spend it. So smart people invest money by setting goals, and money start working from them. So this thing is very important. Once the money start working for you, then you will be free. So you can be free after 10 years. So you need not to earn 9 to 5 in that case. Money will earn that much which you are earning now by working hard. So now I am handing over this thing to Priyansh, and he will teach you how to proceed further. Thank you, Priyansh.
Okay,
Okay.
so I'm coming to today's topic. We are going to talk about very powerful thing today. The people think that this is one thing that we how to start making money in a particular market, like say a market which is the different kind of markets we see. What we see is a kind of market where the stocks, what we have seen in after May to 2020, April 2020, the market keep on moving up continuously, right? It has gone down for 200, 400 points in between. And again, and the people, those were having fear. They came out from the market at that point of time. Now it will go down. Otherwise, they have not invested even. No, it is moving up. Even there is COVID and there is number of problems. Still, it is going up. How I can enter into this kind of market? I can see nothing is working in any area. In my area, also business is going down. How the market is moving up? But the matter of fact is, market continuously moved, and it moved up like anything. It has not moved. The Indian market has not moved in such a pace in the recent past. I'll say whatever we have seen since 1990s or say 2000, but it started moving like anything, and it keep on moving. Now, what happened in last 3 months, right? Very important fact that I'm going to tell you, that foreign institutional investors, who are the foreign institutional investors? Those are new people. They must understand that foreign mutual fund or the foreign pension fund, they're allowed to invest in Indian market. Like, so they buy shares. Because why they buy shares in India? Because they know that that is a growing country, right? There the rate of GDP rise is very high, right? Again, they know that in this particular country is having huge amount of population to consume different kind of consumables and other different things, because we are having huge amount of human resources. Everything is there. Everything is good about a growing economy in India. So they think that they can invest in India and they can get a better return from here. So they invest in these kind of emerging markets like Brazil, China, India, Indonesia. These are emerging markets, and where the growth rate is quite high. And that's why they invest in India. But what happened? They have taken a huge amount of money in the last 3 months. That is their idea. But what happens? Their investment depends upon number of things. Their investment depends upon at what price they're getting the money. They're getting the money, they invest in terms of dollars or they invest in terms of foreign currency. And definitely they're bringing that money from somewhere, right? They are taking money from their investors. And there are different kind of investment options that we have seen in the first session itself, that there is a bond market, there is a share market, there is commodities, and there are a number of other things. So for them, if they will see that the dollar prices, the dollar index is moving up, the interest rate in America is rising, and they will feel that inflation will be quite high, and they feel that they are not able to generate that amount of profit from this market. They generally try to take out their money, but it is not possible for them, and this is not logical also for them to take out their complete money at once. That is not possible, because see, always remember one thing, that if you are buying a share, somebody is definitely selling. That's why you are able to buy. And once you're selling a particular share, please remember somebody is actually buying. That's why you are able to sell. Otherwise, it means whatever you are thinking, the person who is thinking is just opposite to that. It means different kind of views are always available in the market. So, but even after this huge amount of selling last 3 months, right? The market is not even not going to fall, not more than 10%. And because of this, this shows the strength of our market. What happened in the last few months, the last 3 months, what we have found, that Indian investors and Indian domestic investors, DIIs, domestic institutional investors, that is our mutual fund, our insurance funds, they are investing, and our traders and our retail investors started investing in share market in a huge amount, and they're able to digest all the sales of the FIIs. So the very good idea about this is If FII will stop, not only they start buying, but only they will stop only selling. They will stop their selling. What will happen? And they have to stop selling. They cannot. They're not having a better investment idea other than these emerging markets. So they have to some amount of their money in these markets. In America, the growth rate is not more than 2 to 2.5% in any case, right? So if they want to keep their money, they decided to keep their money in Indian market, or they will bring more amount of money, or they will stop selling even, the market will shoot up from here, right? It may shoot up from here. So the number of factors that always going on, like what we have seen, the Omicron, what we have seen that the second wave, what we have seen the first wave. But what happened exactly is when the COVID came, why the market started rising actually? The simple reason is market was at 12,500, it fell down to 7,700. I'm talking the Nifty terms, right? And once that Americans, they saw that this kind of problem is there, they started printing dollars. Most of the economies in the world, they knew only one idea, how to stabilize the economy, how to support the economy, print more amount of money, make more amount of liquidity that will bring the demands in the market, and once that will create demands in the market. See, try to understand, this is basic idea of economy, those that are not aware. If more amount of money with you, the cheap money with you, cheap money means at the low interest you are able to get the money. What will happen? Say, take a simple example, traditional example, a real estate example. Say you are going to buy a property, right? And you come to know that the price of that property will increase at least 15% or say 12% every year. And you're able to take loan in the market, a home loan or a loan against property, say only at the rate of 9%. So what will happen? You have taken loan and you have started paying EMIs. Your loan interest rate is 9% and you are able to get a return of say 12% or 15%. So remaining 3% or the 6% is your pure profit. Your pure profit. So this is how. But what will happen? Say interest rate will rise, right? And definitely a profit margin will reduce. So in America, the rate of interest is almost 0%, right? So the Fed, the American Reserve Bank, you can say, like in our Indian market, there is Reserve Bank. In America, they call it Federal Bank, and they decided to increase the rate now because they are having the fear inflation. They think that the prices may become so high that it will become uncomfortable for the economy. Generally, in the emerging market like us, the rate of inflation between 3 to 5% is considered good. Yes, I'm telling you, the rate of inflation between 3 to 5% is considered good, because if there is no inflation, then there will be no growth, because the people, they think that if the prices are not rising, they do not get promoted, they do not get motivated to to produce more. So in our emerging markets, in our market, the inflation is 3 to 5%, even 6% is quite okay. So what is going on? We are able to grow during the time of COVID because of the support of the foreign institutional investors, or because of any kind of investment that much. Now, if they will stop even selling because they are not able to get that amount of uh, say growth in any other market, so definitely they have to stop selling. And once they will stop selling, what will happen? See, every time, every month, the total investment through SIPs of the mutual fund or direct mutual fund investment is continuously increasing the investment in the Indian stock market. And if that will keep on going, because that will definitely keep on going, definitely the market will rise from here. I'm not saying that there is a correction of 5 to 10% may not come at any point of time. That is possible at any point of time. But what the people say, that share market will go down, will come down to the level of 6,000 Nifty or the 7,000 Nifty, that is not going to happen, right? For sure, because there is a booming economy behind that. The booming and there is a consumption story of India, and that is continuously making the market up, right? Say, try to understand. If we follow the long-term trend of a stock market, right? Long-term trend of a stock market means, say, I'm going to show you a slide. I'm going to show you a simple, say, website. Hold on a minute then. say I'm going to see Nifty 50 chart, right? And this is a last day chart of the Nifty where the Nifty fell down for 8 points. I'm going to tell you the chart of the maximum period. Say maximum period chart is available at this chart, say from 2002. So at 2002, the Nifty 50 was at 1053. And 31st August 2001, the Nifty 50 was at 1053. And you will find out if you have invested only in the Nifty 50 stock, say 1053 rupees on 31st August 2002. So without doing anything, without making any pain, you're going to make it say 17,101 today. 17,101 today. So without doing anything. So the money has been increased by almost 17 times. Money has been increased in the last almost say 21 or 22 years, 18 times, right? So if, and you need not to bother about the COVID fall, or you need not about the Lehman Brothers fall of 2008. You need not to bother about anything. It is the general trend of the stock market. Mark the words I'm saying. General trend of the stock market is it is moving up continuously. It fell down. Just see here where my cursor is. It's fell down from here in somewhere in during the time of COVID. It fell down up to this level, but again it started rising like anything. So the inherent, that the basic nature of the Indian stock market is a continuous rise. So if you are an investor, you need not to worry. To an investor, you need not to worry about these falls. If we are having the view of the 5 to 10 years, then you need not to worry. You should keep investing. You are going to reap. You are going to reap a very, very good profit. Right. Coming to again back to the topic of today. So what is trend? I have told you that mark my word trend. So trend is in say in general trend of the stock market is up, right? Overall we are in a bullish trend, right? It happens like in case of Japan, when the Japanese economy started booming in 1970s, and there was a downtrend started, and that keep on going down for the almost 25 to 30 years. So that is a bear market, and the economy they have already reached to their pinnacle. They start coming from down from there, right? So but we are not in that phase. We are the next 20 years of the Indian stock market. The people say that the India is going to see the mother of the next bull run will be mother of all bull runs. The whatsoever we have seen till now is nothing. But if you're not going to invest now, you'll not be able to invest in next 10 years again. You'll see after 10 years and feel that whatsoever I have told you today, after 10 years, feel like if I could have invested at that point of time, this money has been grown up this much. Even I'm not having any imagination, I'm not having any idea, but I'm having the clear view that we are going to move further, we are going to get huge amount of uptrend. So what is a uptrend or what is a trend? A trend is the overall direction of the market of an asset price. Like what we have seen, the yearly trend or the trend that we have seen since year 2000 to 2002, that is a overall direction of the Nifty. But say if you are investing for few months or the few weeks or the few days or the few hours, that is the trading, not investing, then you have to follow a particular kind of trend, right? And technical analysis, trend are identified by the trend lines or the price action that highlight when the price is making higher swing, when its price is going higher, and when the price is going lower. So when the price is going higher, we call it uptrend, and when the price is going lower, we call it downtrend, right? So generally, what happened? There is one very common sentence that the stock market people know, that trend is your friend till it bend. Trend is your friend till it bend. So when that you are following a particular trend and you are able to ride over that particular trend, you have to follow that to get the maximum profit. I'm going to show you how the trend flows and how you have to trade with that. And if there is a clear signal that trend is bending, you have to come out from that particular stock. If you're not a very, very long-term investor, right? So many traders have to trade in the same direction. Generally, the people feel a general idea, the first idea when we come to the stock market is the price, a particular price particular stock, the price is going down, it becomes cheaper, now buy that. No, if it is going down, it may go down more, and it's going up, it will go down up more, right? So if you are going to make investment for the few weeks or the few months, then you should follow trend. You should not try to go for bottom fishing, right? It may happen a particular stock is falling, it will fall more, right? Never catch a falling knife, right? That is a very important idea in the stock market. And important thing is all not it's not only about stock, it's about commodities also, it's about currency also, it's about billions also, everything. Whenever it moves in a particular trend, you once the trend is confirmed, you should start riding on trend till the trend defies itself. So over the week over week, month over month, you should continue riding on that particular trend, right? According to your horizon of investment. Coming to the next slide, how the trend works. There are various kind of one after another we are going to discuss. Like last time we have discussed MACD, and I have told you how to enter according to MACD in a particular level, and how you can come out after a signal that will show you clearly that you have to come out from that particular level. So you have to follow those particular things, and there are different kind of at least uh, hundreds of indicators in the market. But if you will try to follow every indicator, I have seen the number of screen of the people those are trading in the market, and they are using multiple indicators there, and they do not follow even a single one, right? Instead of studying and following multiple indicators, you will follow the simple idea of one indicator or even simple moving average. That will give you a very good profit, instead of following multiple indicators and not following any discipline, right? And with what the people, the next mistake the people make, what they do, they once one indicator will give them buy signal, they will check it from the other indicators also, right? Different indicators are having different parameters. While following one indicator to enter, you should follow the same indicator to follow the trend and to come out from that particular stock. So you cannot follow multiple indicators at a time, right? People are, they keep at least 10 indicators at a time. That is not advisable, and you should not do that. You should have a simple, clear idea about how you're going to enter according to your discipline and how you're going to come out from there. And always, very important thing in the market, there should be a stop loss, right? According to whatever your indicator is, not according to your own views, right? You should have a stop loss, and you should not manipulate that according to your psychology. The psychology in the market or the emotions in the market, they make the maximum losses, right? And this is how technical analysis tells you how the technical analysis works, because the technical analysis works on the whomsoever is taking, say, trading in the stock market, whomsoever investing in the stock market are the human beings, and that try to study the human uh, psychology and how the prices moves, because who are buying, the people are buying, who are selling, the people are selling, right? And even the machine trade is there, who has kept the different formulas and machine, the human being. So what happens is, just because of this, the price generally repeats itself. It means that price trend on a particular stock or price trend on a particular market that repeats itself, and the same kind of formation or the same kind of pattern will give you the almost similar result. That's why technical analysis works, right? So what is uptrend? And the overall increase in the market, and the overall increase in the market is going up, and there may be definitely a low, but that low is not a low that is made by the. I'm going to show you the next slide that will give you the clear idea. Say this is a clear uptrend, but what is going on? Just see here, there is had that where my cursor is. This is the T point is the bottom, and from here the stock is started moving, and then it came down. But it has not gone below the previous lows, and again it starts moving up. And once it crosses the previous high, you should enter here. You should enter here, and your stop loss be should be below at this particular label where this HT is written. Your stop loss should be below there, and you should keep on moving this stock till this trend will go up. So what is the trend? This is making higher lows, higher bottom, and higher top. Higher bottom, higher top. Higher top, higher bottom. Higher bottom means this bottom is above this bottom, and this bottom is above this bottom. Again, this bottom is above this bottom. Once this will go on, you should keep on riding this particular trend. Say this is a higher top. Again, it goes down, but once again it makes high, and this high is not able to cross the previous high, and it goes down uh, the level of previous bottom, then you should come out from here. You may say that why I should not come out at the top, because there is no signal. You'll not be able to get this, that the stock is not going to move further from here. So even going to follow this particular trend, you're going to make huge profit. Even the profit, you cannot be able to come out at the top and not be able to buy always at the bottom. So instead of that, we are trying to maximize profit. So we are trying to where we can enter and where, but it may happen that you have entered here and the stock will start coming down from here, and your stop loss should be there. Where? Here. So this is say 1 rupee stop loss here. So you have say on a particular share, this is say 1 rupee stop loss. So you might have lost 1 rupee, but how much you have gained? At least 10 rupees. So this is 1 is to 10 trade. If your every trade is even 1 is to 2 trade, say your stop loss is at level 1 rupee, and you're going to gain if your target approaches 2 rupees. So what will happen? You will be able to say you have made 10 trades accordingly, right? And take a probability of 50-50. The stock market may go up, may go down. And in those 5 trades, you have lost 5 rupees. And those next 5 trades, you have got 2 rupees in each trade. What will happen? You're going to take 10 rupees from there. So you have lost 5 rupees, you have lost, and you have gained 10 rupees. In overall, you have got 5 rupees. This is how, even you're not able to predict anything, you're going to make profit if you're following with complete discipline your stop losses and target price, right? This is a lower trend or the bear trend. And what is going on? Say you have sold a particular stock. In the next few classes, we will tell you about how to sell in the stock market and how to make money. Right? We are going to tell you about future and options also. So there you can make money if the stock has a higher price and it starts going down, and the top is not able to cross the previous top, but it comes down and makes a lower bottom, and then lower top, then lower bottom and lower top. So once it crosses this particular low, you should sell it here and keep moving on this particular trend till it defies a trend and makes a high higher than the previous high. It makes a high higher than the previous high. You should come out from there. So this is how we say this is short selling in the market. And the traders, they actually trade, they really trade, right? They use this idea also, selling and making huge amount of profit. Selling and making huge amount of profit. This is how you can make profit with selling also. And believe me, the sell trade are very quick, very fast, and they generate huge amount of profit within a small period of time. But for that, you have to learn, then only you can earn. The name of the channel is also Learn and Earn. So how to trade? I've told you a support and resistance, right? We know that whatsoever I've say, I'm going to the previous slide. Just see. If you have now most of your buyers, so say you have bought it there, and this will become your stop loss. The HT return at the first time, this will become your stop loss, and this will be definitely your support. And once this will cross, it will cross, it will, this is this is the top, and once this will start crossing this particular line, you should keep your stop loss at this second HT, right? That is the higher bottom. Your stop loss should be here. Once it will cross the third top, your stop loss should be at this particular bottom. Fourth, your stop loss should be there. And once this will become there, your stop loss should be there. Once it will come below that, your there, your stock, your trade should automatically exit from here. So this is, so what is going on? Actually, the wherever wherever the stock is making turn, it's coming down and starts moving up, that is actually becoming support, right? And if the support is there, definitely some amount of resistance is also there. So what is support and what is resistance, guys? Like, if I will say this room is having, if I will throw a pen towards the top of this room, what will happen? From which level it will reach? Definitely it will reach to the till the roof of this particular room, and then it will come down. So we know that there is a block, there is a resistance, and well, I will say I'm having a projectile and I will throw towards the roof. What will happen? It will break the roof and it will start moving up. So that amount of force is there that will break the roof. And at the once it will say I have thrown a pin, will touch the roof and starts coming down. Up to what level it may come down? Definitely up to the floor, not beyond the floor. So this is how that is a support, right? So this on the stock market also there are resistance and there is support, right? And supports are there where the number of buyers are already there and they want to buy that particular stock at this level because they feel that at this level the stock is very very cheap and maximum number of buyers are there, while at the resistance level, the maximum number of sellers are there, and once the stock comes to that particular level, they want to sell it there. So this is, I'm going to tell you how we are going to get support and resistance. But first of all, you have to understand what is support. Support where the maximum number of buying is huge amount of buying is coming, and what is resistance where the maximum number of sellers are there, and the prices generally do not move up to from that particular level, right? So what happens is, say on this particular stock, this is a resistance. The first line at the bottom, at the blue, is a resistance, right? And what is happening? The stock is coming up to here, and it comes down once, twice, thrice, four times, and it starts going down, and again comes to this particular level, and it crosses that particular level. Once a particular stock crosses a particular level, a particular resistance of the previous resistance, that becomes a support for that particular stock. You can see it crosses that particular level and it moves up and reaches to a particular resistance. But once it comes down, it is not going below this particular support level. Again, it's trying to cut this resistance once, twice, thrice, four times. After generally third or fourth time, and the stock crosses the resistance and crosses the resistance and reaches to the further resistance, comes down to support and again tries to move up. So once a resistance broken, it becomes a support. But once the support is broken, it again becomes a resistance, right? So you have to be careful about these levels. But how to find out this support and resistance level? We'll come to that later on. I'm coming to the topic that is trend, that is uptrend and downtrend, and how to ride a particular trend, right? So there is one thing that is known by them trend line, right? The trend line gives you the overall direction, right? And it gives you the idea about the higher supports or the higher highs or the higher lows, and it if we'll join those points, I'll show you how to join those points. And if we'll join those points, it will give you the clear idea that a stock is in uptrend. What happens is on a particular day, a particular stock fell down by 1%, and then the people like us, those are they are not aware about the market, say, like what happens, they feel that the 1% this is 1% down and they come out from that particular stock. And what happens generally, the people are having the experience, general people are having the experience, once they sell a particular stock, it starts moving up from there, and once they buy a particular stock, it starts coming down from there, right? But if you will feel if you will start feeling that you should go for different time frames in the chart. Like if you are an investor for a 3 months or the 6 months or the 1 year, you should see at least a daily chart or a weekly chart, and you should decide according to that You should not decide your investment according to the 15-minute chart or 1 hour chart. You should always follow 1 hour, 1 day chart, the daily chart or the weekly chart. And you have to draw a trend line there and you have to work accordingly. But how to draw a trend line? That is very important thing, right? Right. And how to again rearrange the trend line, right? So I'm coming to news here again. Wait a minute. Let's try this. So this is a particular stock which is moving like this, right? So what you have to do is you have to find out the points, those are the lower bottoms. I'll try to, and you should try to connect all the bottoms. Those are lower bottoms. Try to connect the maximum bottom. You'll not be able to connect all the bottoms. So I will take this particular bottom. I will take this particular bottom. I will take this particular bottom, and the line looks like this. Line looks like this. And once this line is breached by the stock clearly for the, say you have taken a weekly chart on a weekly basis, I have taken a daily chart on a daily basis. You should come out from that particular stock. Now come to the say stock market or a direct platform of a broker, right? Wait a minute. Say this is chart of Adani Port, all right? It'll look like, you'll see there. This is a lower bottom. This is a lower bottom. Okay, wait a minute. Now you're able to see the screen, right? Now this is a bottom, which is a lower bottom here. This is a lower bottom here, and this is a lower bottom here. Try to connect. You will try to connect the line. It goes like this, right? See, just see. I will try to draw. I will try to draw a line for you here. Take it here. Just look at this particular line. Are you able to see this particular line? Just if you connect the bottoms of these lines, what is going on? It is coming to that particular line and moving up, coming to that particular line and moving up, coming to that particular line and again moving up. But once it crosses this particular line at the lower side, right, you will feel there is a change in the trend. You should come out there. So say it has made the second bottom, you could have bought it here and you could have sold it here. So you could have made a profit. You could have bought it at the level of 443 and you could have sold it at the level of say 800 rupees. That is almost a profit of 40 to 50%. That is a trend on a daily chart. Here I have created a daily chart. So this is a kind of trend that is going on. Otherwise, say uh, take any other chart and try to draw these kind of lines where you can connect the lower tops on the lower bottoms and try to connect it and try to get your own idea and try to study first that how that price is moving later on that particular, according to that particular line, and when it crosses that particular line, what kind of pattern it is creating. So this is a homework for you. You must always try to backtest these ideas, then only you can move further, and you will be able to find out how to trade in the stock market. So the rising trend begins to lose momentum and selling pressure kicks, right? Then there is a one thing that is known as RSI that we are going to tell you about these things in the next lectures. RSI is a very, very, very powerful indicator that is available in the market. And with the help of RSI, you can confirm that your trend line is showing you correct or not, right? So RSI is just to confirm your decision, not to take decision. That we will show you in the next few lectures, right? Coming to next thing, that is, I have told you that I'm going to tell you about the support and resistance. And if you are able to draw your support and resistance, is very, very good. Otherwise, there is a very important support and resistance indicator there is available in the market that is known as pivot points. And the pivot points is again a technical analysis indicator, and that is calculated on a complex basis. And try to understand that understanding how a particular indicator calculated is not our idea. We are not going into that. We are not going to create our indicator. We are here to use those indicators correctly and get the maximum profit. So if you want to learn how the pivot points get calculated, you can Google that and you can get it from there. But here I'm concerned about how to use it. Right. So pivot point will give you up to which level a stock will go and from where it will create a bearish sentiment, right? The pivot point, the basis of indicator is where you are going to get the maximum selling and where you are going to get the maximum buying, right? Again, coming to the market and see, this is the chart I have shown you recently. That is the Adani Port chart, right? And I am going to mark studies just right here. PI, this pivot point is there. And this is come to a chart of, say, I will be able to see clearly. See, these pivot points are there, right? And this black line is there in between. And you'll find that there is a red line at the top and different colors. These are the different support and resistance. Black line where the stock price is generally available. The stock is available at this price currently. And the red line, this is actually a resistance, and the green line below that is a support, right? So what you will find, generally the stock, just see, this stock has reached to up to a level of 789 or something there, and it starts coming down from there, right? And if breaks the lower support also, it goes down very fast and reaches to the next support and it starts coming back from there. So you'll find that these lines, they work as simply, not exactly, but simply as support and resistance. You'll find that most of the time stock takes support at these lines and that it starts coming down from, it's coming up from there. Just see how many times at here, how many times that stock has got support at the level of 735, 735, and once it starts moving up, it reaches to level up the next level, that is 789. That is a predefined support and resistance given by the pivot points, and you can follow that. And do not buy any stock just below the pivot point or once it reaches the pivot point. Once it crosses the pivot point and it stays there, when it crosses the pivot point and it stays there, you should buy the stock there, right? If you are buying according to the pivot point can be used in any of the chart, and you can buy it, you can sell it according to the pivot points also. But the idea is, say I'm going to check with another stock. So this is Reliance. And this particular pivot point, just see at the level of 2275, it has taken support, right? And it has moved up, right? And here also at this particular level, it has taken support. And at this particular resistance, at the 2599, it has taken, there is a resistance. So this is how pivot point works, right? But if a pivot point is again a price, it is made up of the price, and if pivot point is crossed by the stock, generally it moves to the, that's not a rule, but generally it moves to the next pivot point, upside or downside. So it's up to you how and which indicator you are trying to use. But the idea is whatsoever we have told you, the moving averages, we have told you about the MNCD, we have told you about the pivot point, we have told you about the trend lines. Try these 3, 4 indicators, these 4 ideas in your charts. Open your Demat account and try these 3, 4 ideas in your Demat account and try to backtest that. Yeah. What is going on here? Another thing. Just see this chart. This is a clear uptrend that breaches here, and the stock goes down now. So this uptrend, if you draw a, say, if I will draw a trend line here, just see. Are you able to follow this particular trend line? So I should have come out here. If I could have bought Reliance at the level of 2080, and I have sold at the level of 2627, right? And that too in the almost 3 months, I could have made almost 30% profit. So this is how it will follow any of the thing with discipline are going to make huge profit, right? So this is how we are trading, and you should also generate your ideas, and you should also trade in the market. Now the homework for you, draw your trend lines, at least 3, 4, 5 charts, and try to follow that, right? So this is again L2 investors, and we upload these videos on the YouTube, right? So we share, I'm going to share these YouTube links also with you, and if you have missed a particular part or you have missed the earlier videos, you would follow that particular YouTube, you will be able to get all the lectures there. Right now, I'm open. You may ask any questions if you want to ask. A few people they want to listen about the budget, so I'm hopeful. Uh, the site that madam you can follow investing.com. Investing.com is having all the charts, or even your whatsoever the portal you are using. If you're using an online broker, the portal will give you the all kind of chart. Otherwise, investing.com is having free charts available there. Investing.com is having different kind of indicators also available there, and the free charts are also there. You can use it there. Right. Yeah, budget. The budget is. I'm hopeful that budget will be good, but budget is generally the budget euphoria in the market for the 1 or 2 days, and then it moves away, and the market follows its own trend. So it may happen very good or very bad for the few stocks, but my idea is not to trade according to budget and not to enter according to budget in any of the trade. You should follow your basic idea. Instead of impulsive buying or the impulsive selling, you should follow trend. Anybody else? Okay, guys. So we are going to meet you again at the 12:15 in Hindi. Those they are not able to follow this lecture initially, they can continue with the Hindi lecture at 12:15. We are going to start at 12:15. Thank you. Thanks a lot.